know you might still have doubts. Let's tackle 3 common objections that might be running through your mind. I barely have time to sleep, let alone dive into hours of stock research. This is a fair point. You're busy. Maybe you're in a high demand career, running a business, or taking care of family responsibilities. But consider this: small investments don't require you to become a market guru overnight. You can rely on curated information sources, reputable newsletters, analyst reports, or even platforms that aggregate research. Spend 30 minutes a week reviewing 1 or 2 companies. That's enough to gradually build a watch list and identify a few potential winners. Over time, you'll develop a sense for what to look for, cutting down the research time needed. Now you're thinking, great, I invest $1,000 and double it in a year. That's only $2,000. Big deal. It's easy to dismiss small gains because the absolute dollar amounts seem trivial. But remember, the key word here is growth. We're not just multiplying 1,000 by 2 and stopping. We're demonstrating a process. If you can achieve outsized returns with the small amounts, you can eventually apply the same approach to larger amounts as your confidence grows. Moreover, compounding works wonders. If you identify multiple opportunities like this over time, the cumulative effect can significantly move the needle. Even if you always invest relatively small amounts, outperforming the S&P 500 consistently for a decade can drastically change your financial landscape. But isn't this too risky? Small does not automatically mean risky. In fact, starting small can be a way to mitigate risk. You're not putting $50,000 into a speculative play. You're putting $1,000 or $2,000. If it doesn't work out, the loss is limited and you learn valuable lessons without catastrophic consequences. By carefully vetting companies, looking at their revenue streams, market potential, competitive advantage, and financial stability, you can pick smaller investments that are relatively safer. Plus, if you diversify these small bets across a handful of promising companies, you spread out your risk. The idea is informed investing, not blind gambling. At this point, you can start to see that the biggest hurdle is a mindset issue. We are conditioned to think that big results require big inputs. Yet, the stock market is rife with examples where early, modest investments led to impressive returns. The skill lies in identifying these opportunities, having the patience to let them grow.